All right, to the markets now, and having already surpassed some well-established tech giants, Nvidia is on a roll. But how long will the stock stay on top? For more, I'm joined by market strategist Jess Amir from Moomoo. It's wonderful to have you with us. What price range is Nvidia's stock expected to fall to after the 10-to-1 share split we saw? It's interesting stuff.
Yeah, it is an interesting phenomenon. It's actually not a phenomenon at all, but I guess it's worth just pointing out that it's actually not going to fall. So a lot of people are saying, I'm going to wait to buy Nvidia shares because it's falling. Well, it's actually not falling, so it's more of a repricing. It's a tricky one, but Nvidia's stock is splitting 10-to-1, so it's dropping from where it closed at effectively last night, $1,148, but let's see where the dust settles after it splits on the 7th of June. And then once we come into work on the 10th of June, it'll be probably trading under $200. So it'll be under $200 for the first time in 16 months. So it's something that this company has done. It'll be the 6th time, and each of the last 5 times they've done it, if we have a look at Nvidia shares, they've rallied up on average 23% from their announcement to the post-split day. So it's a pretty exciting time for investors and traders, but more broadly, Mike, it's really, really exciting for investors who haven't yet bought into Nvidia because they're going to be a lot cheaper.
Yeah, it's a whole new world for so many people out there. As somebody who played video games, I've been watching Nvidia do their thing for a long time now, and everyone else is getting excited about it. So how did Nvidia's shares perform on average during its last 5 stock splits? If we can sort of take a look back and triage it, Jess.
Yeah, it's a great question. So it is really important to look back at history to see what can typically occur going forward. So every time they've announced a stock split, their stock has run up considerably. If we take out 2 years where they didn't do so well, the average stock split rally up was maybe in the order of 40 to 50%, up to a new high. Just emphasising that this is not over a year, it's rallying up to a new high. So it means that investors needed to be nimble if they wanted to kind of lock in those profits after the shares ran up. Notably, back in 2020, when Nvidia did a stock split, then, Mike, their shares ran up 67% to a new high. But if we just take a bigger picture, I think that's far more interesting for the average investor. We do know that Nvidia shares are still deemed undervalued by the average analyst on Wall Street. And yes, they're going to drop and be under $200. But what is most exciting is their future. And they're the only company in the world that has got forward-looking revenue growth of over 90%. So this is unseen, and it's we've never seen this before in history, in fact, and particularly for such a hot sector of semiconductors. It's a really exciting time. The investment world is excited. Retail investors are getting excited. And so this is really a great opportunity to potentially consider buying into a company that's going to change the world as we know it.
Yeah, absolutely. The investment within silicon chips and whatnot is not going anywhere anytime soon. What makes Nvidia's current situation a bit different and I guess better compared to its past stock splits, if we could look at those who haven't got in yet? And of course, they'll be gunning for Apple at this stage, won't they?
Yeah, it's a great question. So we do know that 40% of Nvidia's clients, or 40% of their revenue, is coming from those mega, fast growing hyperscale tech companies. So think Meta, think Microsoft, think Amazon, and think Google. So, and if we can just round it off and say 5, whack in Oracle into the mix. So these companies make up 40% of Nvidia's revenue. That's extraordinary. And we do know that Jensen Huang, the CEO, recently did say, hey, the AI fourth revolution is really at the tip of the iceberg. What does he mean by that? Well, just think about what we were saying. We do know most of their clients are in tech, but what's going to happen when the breadth of their balance sheet starts to extend out? So we do know they just recently inked deals with GE GE Healthcare, Johnson & Johnson, and then don't forget that world's biggest healthcare company, Novo Nordisk, who's based in Denmark. And of course, they've collaborated with NVIDIA, and they're building the world's biggest supercomputer in using NVIDIA chips in Denmark. And so really this is just highlighting that we have an unparalleled opportunity where a company is making most of their money from tech and they're about to diversify into other industries. Add it all together, let's just look at the next year. We're looking at 90% revenue growth. Again, there's no other company in the world that's got forward revenue growth of 90%.
Jess, I want to thank you for joining us on the program and giving us such a detailed run through. It's certainly exciting times for the NVIDIA team and, of course, investors who are jumping in on the ground floor. So thank you once again.
Absolutely. Thank you so much, Mike.